But having said that, you have a longer term break here. So any pullbacks in this range are buying opportunities. And my guess is in the next 2 to 3 months, we take out this high and we start running towards 2,200, 2,300, maybe even $2,400 an ounce by, third or fourth quarter of this year.
Okay, let's pivot here and look at gold, because that was your asset pick for 2022. Last time we spoke, you said the charts were looking really good, beautiful. Now as you know, we went above $2,000 an ounce. Investors rejoiced. We've come back down since. The question is, what's it going to take to get above 2,000 and hold that or move higher?
Yeah, so I mean, gold was absolutely a remarkable mover there. It broke out, which is the first stage of the next big move that I'm seeing. I'm kind of in the camp right now where I think there's a little bit more downside to it in the near term. Maybe a retrace to this little pivot, which is right around 1875, 1870 per ounce. But once you get there, I think the next leg starts to the upside. And this is very common, by the way. If you look at the high from 2020 and draw a trend line right there, you can see this was a classic double top. It's resistance. Price is expected to pull back off of that, and that's exactly what it does. But having said that, you have a longer term break here. So any pullbacks in this range are buying opportunities. And my guess is in the next 2 to 3 months, we take out this high and we start running towards 2,200, 2,300, maybe even $2,400 an ounce by, third or fourth quarter of this year.
So are you suggesting that because we spoke before the interest rate hikes were announced, especially 50 basis points coming in May. So was this already baked into the equation then? Would gold not turn bearish on that news?
Yeah, so I don't view that because rate hikes historically over the last 20 years have caused gold to sell off, but we've been in an interest rate where we've been in an inflationary environment of 2% or less. Now we're in an inflationary environment of 10%-ish, right? So now that changes the whole equation. I think the high oil prices we've seen recently, the cost of wheat and other commodities are only going to fuel inflation, which means, yes, the Fed has to act more aggressively, but high inflation continues to benefit gold. So the longer inflation stays up, the better it is for gold. And I think that's the narrative that's going to take this a lot higher.
Obviously, with the sanctions in Russia, there's a lot of buzz around certain metals that Russia produces, ones especially needed in electrical vehicles, and EVs. Are there certain metals that you're looking at now that you think could really break out?
Yeah, I mean, I really do like the chart of silver right now. It still needs to consolidate a little bit longer, but same thing on silver. You've had this breakout above this trend line here. It's consolidating. I'm looking to buy around $24 an ounce. I think we will get a push down there. And then I think the next move up is all the way back to the $30 high up here. So I think silver's an interesting one.
Oh,
I
okay.
think on the right scenario, something like palladium here. Let me bring up that chart. Palladium's had a big pullback. I think now, in fact, today's level looks very attractive for palladium. Look at this little support area right there. That's really, really good support here at
Yeah.
2,200. So that would be one. I love charts that had these big pops, and now they've come all the way back in because it's kind of like, you didn't chase it, so you should pat yourself on the back for that. But at the same time, you're able to buy it again at a level that was pre-invasion before that massive move. With all the inflation out there, I think it makes a lot of sense.
I think it's interesting just going back to silver for a second. So you buy silver at 24.
Yeah. Yeah, at this point, I would because of the breakout. So basically, the charts rule everything I do. So I have to acknowledge that you had a break point right here. And so any pullback into this kind of retrace trend line area, this is now going to be support. So
Yep.
initially, when you go up into it, it's resistance. Once resistance is broken, it now becomes support. So the chart then dictates that I have to buy that, or I should buy that support when it comes back into play.
Uh, Gareth, if I could just bug you
Yeah,
with
of
one last
course.
chart, you just made me think we should pull up the USD, US dollar. I mean, given the sanctions, there's a lot of concern now and worry, like how will this, come back and haunt the USD down the line? Will it?
Yeah, so I mean the chart of I mean what we can do here is go to the larger time frame on the dollar here. And again,
Okay.
one thing that I see here, at least in the charts, and this is always the question mark, right? We've seen this great move up in the dollar recently because of the fears. Anytime you have fear about war or geopolitical issues, people run to the dollar for safety. So near term, I think that continues. However, I will say that eventually the dollar will not be that safe haven. I think the digital yuan will eventually be the reserve currency of the world. We're still talking 5-10 years out from now, but you already see talk about, Saudi Arabia buying or China buying in digital yuan and Saudi Arabia being okay with that, different things like that. So the markings are out there that the dollar years from now will run into some major issues, but short term, the dollar is still king at this point.